Welcome to the Deep Dive. We're here to cut through the noise and get straight to the key insights on important business moves. Today, we're diving into Aditya Infotech. You probably know them best for their brand CP+. They're India's biggest name in surveillance equipment, especially CCTVs.
That's right, and it's a really significant moment for them. They've just announced the price band for their IPO.
Yeah, it signals a major step. So the price band is set, what, 640 to 675 rupees a share?
Exactly, and this IPO, it's not just about raising money. It's deeply strategic, especially in a sector like surveillance, which is, evolving so fast and is so critical.
Absolutely. And the structure itself is interesting, a mix. You've got a fresh issue of 500 crore rupees.
About 5 billion rupees, or roughly 60 million US dollars.
And then there's an offer for sale, the OFS component, around 800 crore rupees. That's existing shares being sold.
Right, so we're going to unpack what's behind these numbers. Not just the financials, but the strategic thinking, how they plan to use this capital, where they see the growth.
And how they're positioning themselves, especially with everything happening around national security and digital trust.
Precisely. It's a key moment.
Okay, let's jump into that 500 crore fresh issue first. Where is that money actually going? What's the plan?
Well, the lion's share of that 500 crore is actually earmarked for debt retirement.
Ah, okay. Cleaning up the books.
Pretty much, yeah. The main goal here is to make the company debt-free right after the IPO. And that's a really powerful move strategically.
How so? I mean, beyond just lower interest payments?
Well, it massively reduces financial risk, obviously, but it also frees up a lot of cash flow, gives them immense flexibility for future growth, for investment, without having that debt hanging over them.
Right, makes sense. So more agility. What about the rest of the 500 crore?
The balance is set aside for general corporate purposes. But that focus on becoming debt-free, that's the big headline for the fresh issue. It builds a really solid foundation.
Okay, a solid foundation indeed. So once they're debt-free, what does the growth path look like? CP Plus is already huge in India, right? Almost synonymous with CCTV for many people.
It really is. They've spent 15 years building that brand. But the thing is, the Indian market itself, still massively underpenetrated.
Really? Even now?
Oh, absolutely. There's just immense opportunity across the board. You've got the government sector, think smart city projects. You've got large enterprises needing sophisticated security. And then there's the home sector, which is growing rapidly too.
So potential everywhere.
Exactly. And CP Plus is really committed to driving that market development, pushing for wider adoption across India. Their brand recognition gives them a huge leg up, obviously.
Okay, that makes sense given India's scale. But let's talk supply chains. That's critical now, especially for tech and security. Their IPO documents, the red herring prospectus, mentioned imports from China are down quite a bit. What's driving that shift?
Yes. This is a really key part of their strategy, and frankly shows some real foresight. They've been aligned with the government's Make in India initiative for years, since maybe 2015-16.
So not just paying lip service to it.
Not at all. They used it to build a massive manufacturing plant. We're talking third largest globally in terms of capacity.
The third largest.
And crucially, the largest single location plant outside of China. That's a huge statement.
That must require some serious ongoing investment maintaining a plant that size.
Absolutely. It's constant investment, machinery, processes, people. And then when the government launched Manidhar Bharat, the self-reliance campaign, Aditya Infotech made a very conscious call. They decided to shift their supply chains away from, well, let's call them neighboring countries.
Right, they're read.
Towards what they see as a more trusted, secure global network. The big driver was enhancing cybersecurity for their customers, recognizing the risks.
So they proactively moved critical components out.
Over the last few years, yes. They've successfully transitioned most of the key stuff away from those previous sources.
So where are they sourcing from now, if not China? That must have been a complex transition.
It definitely was complex. Requires requalifying suppliers, new logistics,
Yeah.
a big operational lift, but they saw it as vital.
Right.
Now they're focusing heavily on Taiwan. It has the world's largest semiconductor manufacturing base, the fab base.
Okay.
Also some American companies and some from Singapore. It's about diversifying and ensuring that trust factor.
And this ties into their R&D push, too.
Absolutely. It goes hand in hand. They've got, over 150 R&D folks in Noida, and they just opened a new R&D center in Ahmedabad, too.
Yeah.
Big investment there.
Okay, interesting. And speaking of government influence and security, there's this new STQC certification that kicked in back in April for supply countries. How does that play into Aditya Infotech's strategy?
The STQC certification. This is potentially a massive tailwind for them, a really significant development.
How so? What does it actually do?
So the government, specifically the Ministry of Electronics and IT, rolled this out April 9th. Now, any company selling CCTV in India needs this STQC certification. And it's not just a piece of paper. It's stringent. The whole point is cybersecurity. Meaning products can't have any hidden backdoors. The entire supply chain, from the chip right up to the finished camera, has to be auditable, has to be trusted, and there's a tough manufacturing audit too.
Okay, so that sounds like a serious hurdle for some companies, especially those maybe relying on less transparent supply chains.
Exactly. It basically raises the bar significantly. It's likely going to push out a lot of the lower cost, less secure players, particularly, brands sourcing heavily from those neighboring countries without the necessary transparency or security protocols.
And Aditya Infotech, having already made those shifts.
They are perfectly positioned. They're the biggest domestic brand, biggest market share, that huge manufacturing capacity we talked about, deep R&D, widest distribution. They tick all the boxes.
So this certification could actually lock out competitors.
It very likely will disqualify many brands, especially for IP cameras. It basically clears the field for compliant players like CP+. It's a huge advantage, a real tailwind.
If it's that powerful, how do you see the market shaping up then, say, over the next few years? More consolidation.
Oh, definitely. It will accelerate consolidation. Market share is going to shift significantly. Companies that haven't made those investments in security, in trusted supply chains, and local manufacturing, they'll struggle to compete.
So CP Plus could really solidify its dominance.
They're poised to capture a lot of the market share from those non-compliant players. It's about cementing their leadership in this new high-trust environment created by the regulation.
A very strong position. Okay, let's shift slightly. Talk about partnerships. Dixon Technologies, they had that manufacturing JV, right? But Aditya took over Dixon's share recently.
Yes, that was a 50-50 JV. Aditya Infotech took over Dixon's 50% stake in September last year.
But they're still working together.
They are. And interestingly, this wasn't Dixon losing faith. Quite the opposite. Dixon actually bought a 6.5% stake in Aditya Infotech.
Oh, really?
Yeah. And they specifically aren't selling those shares in the IPO. So it signals strong, continued belief, just a different structure. Dixon is now a significant investor.
And the ongoing service contract.
That's mainly for management continuity. As Aditya takes full control of the manufacturing facility, it's renewable annually, provides stability during the transition.
Got it. Okay, what about older issues? Sometimes you hear about a family settlement from way back, 2014, that limits the CP Plus trademark use in places like the Middle East and Africa. Does that actually hinder their growth plans?
Right. That settlement exists. A part of the Middle East business went to a cousin. But honestly, it's a minuscule slice of their overall pie.
So not a big deal for their global ambitions if they have them.
It's really negligible in the grand scheme. Their focus, their energy, all their resources are poured into the Indian domestic market. The opportunity here is just so vast, especially now with these STQC tailwinds kicking in. India is where the action is for them.
That focus is crystal clear. Okay, market approach, online sales. The numbers have bounced around a bit. 1.7% of sales, then up to 4.5%, then back down to 2.8%. Is that channel just underdeveloped for them?
It's important for you, the listener, to get the context here. Online sales for them. That's primarily the home market, the DIY stuff you buy over the counter.
Okay, like individual cameras for homes.
Exactly. And that whole segment is actually just a small single-digit percentage of the total surveillance market in India.
Ah, I see.
So while they're the biggest seller online, even in that niche, and they'll keep investing there, their main investment and strategic focus is on the much, much larger pieces of the market. Government, enterprise, large projects.
So online isn't the main battlefield. What is then?
Their core strength, their main go-to-market strategy is their massive dealer distribution network. It's unparalleled. We're talking over 500 towns across India.
And these aren't just retailers.
No. It's direct dealers, installers, small shops, but also the big system integrators who handle projects for banks, hospitals, schools, factories, the BFSI sector, healthcare, education, manufacturing.
Right, the complex stuff.
Exactly, because their product isn't just a box, it's solution selling. It often needs professional installation, specific setups depending on light conditions, maybe advanced tech like color video in total darkness.
So that hands-on network is key.
Absolutely crucial to their success.
Okay, that makes the online fluctuations seem less critical then. Now, protecting all this tech and know-how, intellectual property, they talk about having extensive technical knowledge, but the RHP seem to suggest maybe not many formal IP rights for product designs. Is that a worry?
Yeah, that's a point that needs clarification.
Yeah.
It's not quite accurate to say they lack IP rights. They do have IP for designs they've developed fully in-house or co-developed. And perhaps more importantly, they've got a whole bunch of new IP applications filed right now, currently in process. They've made a very conscious decision that going forward, all new designs, all the tech advancements will have IPRs applied for proactively.
So it's an ongoing strategy building that IP portfolio.
Exactly. Protecting their innovation is clearly a priority now.
Good to know. Let's look at future investments. That Noida expansion, the R&D center, and corporate office. There were delays, right? But it's moving now.
Yeah, the previous delays were largely down to COVID disruption and uncertainty. But yes, it's firmly back on track. Construction is well underway. They're building a really top-tier R&D innovation hub, plus new corporate office space. Most of the civil work is done.
Opening soon?
They expect to move in within the next few months, based on the latest timelines. It's a big step up for their R&D infrastructure.
Right, and sticking with financials, margins have been pretty stable, around 8.2, 8.4%, but revenues have grown strongly. Why aren't margins ticking up more?
That's a good question. First, context on revenue. Roughly 3,100 crore rupees in FY25, growing really well. If you look at the last 2-3 years, the CAGR is almost 16%. Go back to FY19, even with COVID in there, it's closer to 21-22%. That's way faster than the industry average.
Okay, strong growth. So why the flat margins?
It comes back to strategic choice. The stability in margins right now isn't because they can't increase them. It's because they are aggressively reinvesting, pouring money into building the brand even stronger, expanding that distribution network further, getting ready for the market shift thanks to the STQC rules.
So they're prioritizing market share capture and solidifying their lead over immediate margin gains.
Precisely. Build the moat, secure the dominant position, especially now with this regulatory advantage kicking in.
But you'd expect margins to improve later.
Yes, definitely. They themselves talk about an upside in margin expansion down the line. More localization in manufacturing will help, plus the benefits from the STQC certifications filtering through. It's a long-term play.
Okay, that strategy makes sense. Now, the IPO itself, the offer for sale, the 800 crore OFS, that's a fair chunk of shares being sold by existing owners, including promoters. Given the positive outlook you've described, why sell that much? Does it send any mixed signals?
Well, look, part of any OFS often covers personal commitments or diversification for promoters. That's fairly normal. But the key thing to focus on here is the promoters' retained stake. They intend to hold almost 77% of the company even after the IPO.
77%, that is high.
Extremely high. It shows a massive level of commitment and belief in the future of the business. Any signal from the OFS portion needs to be weighed against that huge ongoing stake. It speaks volumes about their confidence.
Fair point. Okay, last question on the IPO, the pricing. 640 to 675 rupees. Does that pricing leave enough on the table for retail investors wanting to get in on this growth?
Look, it's a unique company in a unique high-growth sector. CP Plus is really the only brand with that kind of consumer recall and surveillance. And there isn't really a direct competitor offering that complete package design, manufacturing, distribution, brand, service, the whole thing.
End to end.
Right. The price band came after a lot of road shows, talking to investors, getting advice from their bankers. The company definitely believes it's priced to allow room for future growth, offering retail investors a chance to participate in what they see as a compelling long-term story, boosted by those regulatory tailwinds.
Okay. And just circling back to R&D one last time, you mentioned the expansion, the new Ahmedabad office. What's the plan for spending and hiring there moving forward?
Yeah, that 150, 160-person team is just the start. They see R&D as their core strength, absolutely fundamental. They've been very clear. They will never compromise on R&D investment. It's a constant focus.
Even if it impacts margins short term.
Even then. Quantifying it as a percentage of revenue is tricky when you're growing this fast, but the commitment is unwavering. They're hiring across the board, hardware engineers, mechanical, software, firmware, people working on their video management software, AI specialists, video analytics, all those cutting-edge areas. The teams are constantly expanding.
So, quite a comprehensive picture. Aditya Infotech using the IPO primarily to wipe the slate clean on debt, positioning themselves for growth in a market they dominate, but which still has huge potential. They've proactively shifted supply chains towards trusted sources, aligning with government initiatives and cybersecurity needs. Big investments in local manufacturing and R&D. And this STQC certification looks like a major catalyst.
It really does pull all those threads together. The financial strengthening, the market dominance, the strategic supply chain moves, the R&D focus, and now this regulatory tailwind. It leads you to think, doesn't it? In a world that relies more and more on surveillance for security, what happens when a company masters its home market like this? When it deliberately chooses trusted supply chains, invests deeply in its own R&D, and uses regulations to its advantage? Could this mix of tech, national strategy, and market control change how we think about security tech leadership, not just in India, but maybe globally? It definitely poses a question about where the next big wave in this sector might come from.